Hey, this is Keith Weinhold from the Get Rich Education Podcast. You are listening to my friend John Larson in the Real Estate Cowboys. Don't quit your daydream.
Have you thought about becoming financially free through real estate investing, but don't have the time or knowledge to get started? Welcome to the Real Estate Cowboys podcast. Each week, we discuss passive income investment opportunities in the red-hot Texas market. John Larson and the Real Estate Cowboys will show you how to leverage their team to build wealth in real estate through passive investment opportunities. And now, here's John.
Hello and welcome to the Real Estate Cowboys podcast. This is your host, John Larson, where we are talking about real estate investing and passive income each week. This week, we are going to be talking about rentals again. We've been talking quite a bit about private lending opportunities, becoming a hard money lender, being the bank on commercial developments and land developments in the Texas market, in Dallas and Houston specifically. But now we are going to turn it back over to rentals, which is another great way to set yourself up for retirement, create passive income, and as we discuss on the show quite often, the 6 ways that real estate and single-family homes can pay you. So basically, when you're looking to choose a rental property investment, what should you look for? How can you tell if one property will be more profitable than the other? While you can't predict the future, there are ways that you can make an informed decision about which rental property to invest in. Once you've narrowed your choices down according to your budget and preferred city, look for these 11 signs of a profitable rental property that we're going to discuss here this week on the show. First, you're going to want to keep in mind some of the many ways that rental properties can be profitable to landlords. And we do discuss this quite often on the show. We talk about the 6 ways that rentals pay you quite a bit. When you finance a property, you're able to take advantage of up to 6 ways that these investment properties, rental properties, can pay you. And so how can a rental property be profitable? What are the 6 ways? And so it's a mistake to think that rental properties can be profitable only if it cash flows. Although cash flow is one way that rentals can offer the owner positive returns on their money, there are at least 5 other ways landlords can benefit. Some of them are direct, such as cash flow. Some of them are indirect. So here, once again, are the 6 ways that rental properties pay you. Number 1, obviously, is the cash flow from the rental income. That's pretty simple and self-explanatory. Obviously, you're going to have expenses each month to run your property taxes, insurance. If you have a loan on the property, you have a principal and interest payment that's due each month. Any maintenance that may arise will be an expense. So any money left over after all those expenses are paid is your cash flow, rental income. Okay. Number 2 is going to be appreciation or equity growth. So keep in mind, landlords also profit from the rental property through appreciation. And historically, property values trend upward, despite short periods when values sink, which, as we've discussed on the show quite often lately, I do believe that a recession is coming here. And I do think we're going to be running into a period where foreclosures are going to start to hit the market, and that's going to cause property values in certain markets, certain neighborhoods to really take a bit of a dip. Now, I don't know if it's going to be as bad as it was in 08, 09, but definitely expect to see a dip in the property market. We're already seeing some cooling when it comes to buying all across the country. So that's one thing to definitely look at. Over time, your rental property value is likely to appreciate as long as you choose wisely to begin with. And so with appreciation, you can sell and realize gains and borrow against the asset, or simply hold it in your portfolio as part of your net worth. So appreciation is another big one, and that's why I list that one as second on the 6 ways that real estate pays you. The principal pay down from your tenant is another way that these properties pay you. So by buying a property in a good neighborhood that's going to continue to attract good tenants with good paying jobs, it's more likely that you're going to keep those tenants, and those tenants are going to keep paying their rent on time and each month, so they're not running into any evictions. Well, with the principal pay down from your tenant, if you have a loan on the property, keep in mind that rental income that you're collecting is going towards paying down that loan and paying down that interest payment. So The caveat is that the property needs to be occupied for this to work, obviously. And if you successfully identify the signs of a profitable rental property and have a good experience with high occupancy rates, over the long term, you can conceivably get a property without ever having to make a principal payment yourself. So think about that. That's pretty awesome. You get 30-year fixed debt on a property. You only put 20% down, and you keep that property occupied to where that tenant is paying off that 80% loan and interest payment that you're paying on the property. It's a pretty good way to generate income, and another big way that rental properties pay you. Number 4 would be hedging inflation. So once again, locking in that long-term finance through Fannie Mae. 30 years at, let's call it 5.5%. You get that rate for 30 years at 5.5%. It's not moving. So as the buying power of the dollar diminishes, you have already hedged your bet by locking in that long-term fixed debt at 5.5%. So another big way. That's one that my buddy Keith Weinhold from Get Rich Education likes to talk about a lot. Number 5 would be what I call equity capture. And so equity capture, or it can also be called instant equity, is when you purchase a property and it immediately comes in the appraisal is higher than what you're purchasing the property for. So example, you buy a house for $150,000, the appraisal comes back at $170,000. Essentially, you have $20,000 of instant equity. Okay. At that point, you could resell the property and profit instantly, or retain it as an equity asset. Obviously, you can rent it out and still borrow against the equity to obtain funds to purchase another rental property in your portfolio. Your property goes up in value, or you buy a property with instant equity and it goes up a little bit, and then you decide to refinance that home, pull that equity out, and then use that as a down payment to purchase another home. Great way to leverage your own properties, your own portfolio to buy more. Real estate and single-family homes are like one of the best ways to help grow your portfolio from within. The last way that real estate pays you is obviously tax benefits, and that's a big one. And so the 1031 exchange is a big tool. So within a 1031 exchange, you and your heirs can profit, by deferring out your taxes each time you sell a property. So to do a 1031 exchange, you keep the rental for a minimum of a year. When you're ready to sell and do a 1031 exchange, you can avoid the capital gains tax. And if you rinse and repeat this structure, you can quickly climb the real estate ladder with higher valued properties with each transaction and never pay capital gains tax. So your family will inherit the last rental property you purchased, but they won't pay the capital gains tax either if they decide to sell. It's basically called a step-up cost basis. So if you keep performing a 1031 exchange and you pass away and leave your property to your children, let's say there's $500,000 of equity, $200,000, $100,000, whatever, in the property, and then your child decides to sell that home, the IRS is only going to look at the actual value of the property when your heir, your child or heir, took over ownership, inherited the property. So pretty cool trick that the government, the IRS, gives you for real estate investing. And there's numerous other tax deductions and advantages that landlords also enjoy. And although it's an indirect way to profit, the tax benefits can be substantial. And we've talked about this on the show quite a bit. Tax deductions encompass everything from the marketing of the property to the purchase of items to maintain the property, so maintenance and things like that, management fees. The deductions also help offset other income on which the landlord has to pay taxes on. Those are the 6 ways that real estate can pay you. And those, we love talking about those. Now, once again, if you're just simply looking for cash flow, we love our hard money lending, private lending opportunities, our debt syndication, so to speak. So you and a group of other people lend on a development in Dallas or Houston. That development, the borrower of that development, us, will pay you a double-digit fixed rate of return just like we would pay a bank. So cash flow, great option, private lending model. But if you want to take advantage of all these other ways that real estate can pay you, and the tax benefits being a big one, then single-family homes is a great route for you. So when we come back, we're going to talk more about, where we're going to get into the 11 signs of a profitable rental property. So as I said, with rentals, if you leverage them, they can pay you in up to 6 ways. Now let's talk about how to identify the right property so you can consistently be paid these 6 different ways through your rental property. So we're going to take a quick break. When we come back, we'll dive into those 11 signs of a profitable rental property. Stay tuned.
you know there are 6 different ways real estate pays investors? Are you interested in getting started with real estate investing but just don't know how? Investing in real estate can be challenging, especially if you don't have the time, experience, or resources to do so. At American Real Estate Investments, they do all the hard work for you. They're a DFW-based company that buys homes in great neighborhoods, professionally renovates them, and places business professional tenants in your property. With their program, you can start earning headache-free passive income and equity growth from appreciating values in the fast-growing DFW market. There is no better place in America to invest in real estate today. To learn more about how their investors are earning up to 100% returns or greater with their program, give them a call at 888-323-AREI or visit their website at areiusa.com. That's 888-323-AREI or areiusa.com.
And welcome back from the commercial break. We are talking about this week on the Real Estate Cowboys. We're just about to get into 11 signs of a profitable rental property. These signs, some are easier to spot, and you're going to have to do research on others. But whatever you do, we talk about this a lot, don't skip your due diligence. Always conduct your due diligence. And if you don't have the resources to find the answers that you need to determine if a rental property is profitable or not, seek professional assistance. Realtors in the area, whatever it may be. And so let's get into the 11 signs of a profitable rental property. Number 1 would be a healthy neighborhood. So what does that mean? You know, the neighborhood, it doesn't need to be pristine with manicured shrubberies and mansions on every corner, but it does have to be a reasonably healthy neighborhood. And so what does a reasonable, healthy neighborhood look like? Well, it means it's not falling apart. A healthy neighborhood typically has a higher rate of occupancy. In other words, you know, the lawns aren't dotted with for rent signs or for sale signs, and there aren't homes that are boarded up. You know, a healthy neighborhood typically always has higher owner occupancy rates. So you have more owner occupants in the neighborhood than renters. You know, so I'm talking about those high B to A class neighborhoods. And if the majority of the renters are homeowners, that usually indicates it's a desirable neighborhood where people want to raise a family. And it also sets you up for what we like to talk about, exit strategy on the show. If you're purchasing properties in good neighborhoods where owner occupants want to live, if you decide to sell your property one day, or if, you know, these are usually the areas where you see high appreciation with properties as well, and you want to cash in on the appreciation aspect of the 6 ways that real estate pays you, then I recommend buying in these high B to A neighborhoods where owner occupants, you know, are living, and it's heavily owner occupied, because you know you could quickly exit out of it by selling it on the retail market to a homeowner who doesn't care how much it rents for or what the cap rate is. They just want to move their family in there because it's a good neighborhood, good schools, amenities, so on and so forth. A healthy neighborhood is going to generally be clean looking. The neighborhood should look like the residents take care of it, and there shouldn't be litter and graffiti up and down the street, which are things that could deter tenants or only attract tenants that you don't necessarily want living in your house. And that's what you're going to find with a lot of these low C to D neighborhoods that look great on paper for cash flow. Oh, they look excellent. But then you buy it and you start to discover, this isn't what I bargained for. This is not what I signed up for. All I'm having is problems. And I bet if you go with your family and drive through that neighborhood, you're probably going to feel pretty uncomfortable. Okay, so that's why, number 1, we like to talk about a healthy neighborhood. Number 2 would be the amenities, plentiful amenities, having a lot of amenities nearby. And so you're going to also want to check out the surrounding areas where you're buying your property. You know, are there amenities like simply sidewalks, nearby parks, street lights? Street lights are important, especially in, you know, more high crime neighborhoods. If you don't have street lights and it's really dark at night, you can see more thefts in these areas and things like that. So those are little things that you want to look at. You got to start thinking about how you would market the rental property. You know, what is appealing about the area? What could you say in the advertisement? Is it close to public transportation? Is it near major shopping areas, gyms, cafes, the local cultural scene? These are all things that would make a potential tenant more likely to sign a lease. Is it close to businesses and jobs and, you know, things like that? And so remember, the more amenities around the property, the better chance of keeping the rental leased out year after year, thereby ensuring that it's profitable, right? So amenities are important. I mean, it's a big deal. Obviously properties that are near like, a downtown type of area where there's a lot of retail and restaurants and, some businesses, those are always going to be in demand. They're always going to be in high demand, but those are going to typically be your A-class type of neighborhoods, so the cash flow on those might not look where you want them to look, right? But the appreciation is there. The opportunity to consistently keep the property leased out with good tenants, that's there. So you can't just look at it about cash flow. Ladies and gentlemen, you want cash flow, do the private lending model. I can't say it enough. If it's just cash flow you're looking for, a debt syndication with first lien position is the best way. Taking the role to the bank is the best way to build a passive income stream because you know what you're going to make each month to the penny. Okay. But if you want appreciation, you want a tenant paying down your principal balance because you want to leverage an investment, 80% of value, then rentals is definitely the way to go. Okay. But so many investors come to me with this misconception that rentals are just huge cash flow generators. It's not necessarily true, especially if you're getting a loan on the property. So if you just want cash flow, if that's your only priority, that's your only goal is to supplement income, replace income, private lending is a good option. Number 3 is a garage. Simple as that. If the property has a garage or even a carport, you can charge a little bit more for rent, which helps with the rental property to be more profitable. A garage is some things that some people take for granted, but honestly, if I'm going to rent a property, I want a garage. Okay. Especially if it's in, a state where it snows, or a state or a property that doesn't have a basement. A garage is a great way to have some extra storage. So that's some things that tenants look out for. So when you're looking at it for a rental property, at least have a carport, especially if it's in, an area where it snows, because it's a pain to have to clean off your car every morning. Trust me, I lived in Michigan. I had to deal with that. That's something that's simple, but I think is something that is needed to have a truly profitable property. Okay. If a property has a driveway but no garage, you can still consider that a good sign because you can advertise it as an off-street parking, which is another value feature for most prospective tenants. If you have to park on the street, that's not that attractive. At least there's a driveway there as well. But hey, maybe building a carport, that would help. But if you want to look, you want to make sure you're hitting all these 11 profitable signs, look for one for a garage and at least a carport for sure. So number 4 would be positive job growth in the area. If you can find a property in an area with positive job growth, that's going to be a good sign that the rental can be profitable. People are always going to follow jobs. If you see companies moving in, that's a strong sign for expansion and hiring. So that's what we see a lot here in Dallas. A lot of job growth, which is driving the population growth. Positive job growth is also a good sign because it means your future tenant has a good chance of not losing their job over a poor economy. To research job growth in an area, pay attention to the local business news, job board websites, and browse the U.S. Bureau of Labor Statistics website. That's a great way to see what type of job growth you're seeing in the area. I'm a firm believer in following jobs for good investments. There's companies moving into a city for a particular reason. That's a great way to look for a rental, or a great reason to look for a rental in those markets. And that can prove to be a very profitable rental. And so that's what we've been experiencing in Texas and Dallas and Houston specifically, is so much job growth that's causing so much population growth that makes it a lot easier to keep our properties leased, and also are causing property values to go up. So our investors that bought with us years ago are seeing a substantial amount of equity in their property at this point. Number 5 is going to be renovations, reasonable renovations. So a rental property can have a rental property can have almost all the characteristics of being profitable, but if the repairs and renovations are going to drain your bank account, ultimately you're going to lose money on the deal. This is why you should never invest in a rental property sight unseen. Additionally, you should always have a thorough inspection done to determine the extent of the necessary repairs and renovations that will need to be completed before it's in rentable condition. If the renovations are within reason, even a fixer-upper could turn out to be a profitable rental investment. Always conduct your due diligence. Always get a third-party company, third-party inspector to go in and check the property out. Just cross your T's, dot your I's. That's all I'm saying here. And, there's going to be people out there that are going to do, they're trying to cut corners on rehabs. It's the nature of the business. So you want to make sure that you're buying a property, especially if you're going to buy it sight unseen. Definitely have to get a third-party inspection, but I recommend, hey, if you have time, go out and look at the property. That's also a tax write-off for you. Flying out to a city to check out the property, travel costs, things like that, because you're investing in the property, or you own properties out in that area already. You want to go and check on another one. It's a write-off for you. Number 6 would be a good reputation. Certain neighborhoods and cities develop reputations as being more desirable than the others. These reputations can stem from intangibles like being a cool, trendy, or up-and-coming place. If you hear good things about an area, chances are there's a stampede of people wanting to move into the neighborhood, right? You may pay a bit more to buy in a neighborhood like this, but there's also a great chance that the rental property you find will be more profitable simply because of the area's reputation. You likely won't have to worry about the property going vacant for any length of time in a place like this. If one tenant leaves, there'll usually be a line around the corner with others wanting to move in. That goes back to the amenities, right? So you buy close to, it reminds me of where I grew up in Detroit. There's an area called Royal Oak where it's, a really cool, hip and trendy place. And, the homes in the neighborhood, a lot of them are older properties that have been, refurbished and renovated, and now they're brought up to cool, kind of trendy standards. And those houses, they sell like crazy and they rent like crazy. But you're in walking distance from downtown Royal Oak, which has got a bunch of restaurants and nightlife and things like that. So that's where you would see this good reputation that I'm talking about here. Number 7, low crime. Typically with C-class neighborhoods, D-class neighborhoods are going to be high crime areas. And so low crime areas are always going to attract good tenants. High crime areas are generally going to be tenants that you're going to run into evictions and problems. The better your tenants, the more profitable your rental is going to be. Low crime areas are where prospective tenants with families feel safe enough to live long term, which equates to reduced vacancy rates for you as the landlord. Pretty simple. Also, low crime areas provide you the security of knowing that there's little chance of break-ins and theft in your property should the property become vacant in between leases. We talk about that a lot too, because I've seen that a lot of times. You buy a property in a not so good area and the tenant moves out or gets evicted, the property's vacant, you're doing a turnover, you put in a new fridge, you put in some new appliances, you would do whatever. Also, the property's just vacant, so, you could steal piping, whatever it is. Or just people break in and just squat in there or vandalize the place just for the fun of it. Kids, that's typically what you're going to see in high crime areas. So that's a great way to just go ahead and light some money on fire, to buy a property in a bad neighborhood that's got high crime. Low crime indicates that a neighborhood in general is better and property values are likely to either maintain or grow over time. So you can check crime rates for an area with a simple phone call to the non-emergency line of the local police department or by checking online statistics. One that I like to use, Trulia, that's a pretty good crime indicator. It's got a map where you can see there's like red shaded areas that you really want to avoid because there's very high crime in those areas. If you're looking at an investment property in a neighborhood and it comes up green, on the map, then you should be in a good neighborhood. But it's always smart to do a little extra due diligence as well. And that goes into driving out and going and seeing the areas and seeing the neighborhoods. People have a general feeling of, hey, I feel safe here. This feels like a safe neighborhood, So that's why I always recommend it's good to go look at the neighborhoods and look at the areas that you're investing in. Number 8 is do not buy in a flood zone. So I've accidentally bought in flood zones before, or flood zones have changed while I've owned a property, and that kind of stinks. But another sign of a profitable rental property is not being in a flood zone. Flood zones cause extra insurance. They're going to require you to carry flood insurance, which is something that will eat into your profits. And so even though home insurance premiums are tax deductible, they can be very pricey. And when possible, you want to purchase a rental property where extra insurance isn't mandated. Like even buying in some areas of Florida, if you're on the ocean or any coastline, where hurricanes are prevalent, they're going to require you to have this extra storm damage, which can really eat into, costs and things like that and profits. And so you have to be careful about that. Number 9, pretty self-explanatory, but good schools. It's a huge plus if your property is located in good schools, good school districts. That typically means that you're going to get good family type tenants, people that are more probable to stay long term, less turnover. Stable families with kids in school are going to be attracted to those type of rental properties. And like I said, it's going to minimize your risk for vacancy and evictions and things like that. And also schools, they tend to go along with the overall quality of the area, which equates to less vandalism, things like that. And also it helps you with a better exit strategy as well. If you own a property in areas with good school districts, you shouldn't have a problem selling that home one day and selling that home for a profit. And so you can get good school rating information online. Zillow is a good indicator, but greatschools.org is probably the best way. It'll give you more schools that are in the area. So sometimes Zillow will just pull just the nearest elementary, the nearest middle school, and the nearest high school, but there's actually other schools in the area where, these children can also enroll into. So greatschools.org is a good one to go to. Number 10 is going to be the price, buying at the median range, right? Like the median home value is what I like to talk about here on the Real Estate Cowboys. I like to buy properties that are at or very close to whatever the median value is in the market that I'm investing in. And, everybody wants to get a great price on a rental property. However, a great price doesn't equal great value. Okay. So if the median home value is $200,000 in a neighborhood or in a market, I'm not going to buy a property at $100K, even though I think it's a good deal and the numbers look great on a spreadsheet. If the median value in this market is $200K, a $100,000 house is not going to be in the best neighborhood, which means it's probably not going to hit any of these 11 profitable signs of a rental property. Okay. And it's not going to be able to get you the up to 6 ways that real estate can pay you. So that's a very, very important thing. It's a strong sign of a profitable rental if the price is within a few $1,000s or a few tens of thousands of dollars of the median home value in the area. So if the median value is $200K and you buy a $150,000 house, you're probably still in a pretty good neighborhood. But $100K would just, in my opinion, be deviating far too below whatever, that median income there, which means the property's not going to be positioned in the best area. Okay. And when you buy within the median range, you can be assured you're buying a high B to A class property that has the best potential of giving you a high rate of return, and not just cash flow, the appreciation, the fact that you can keep the property leased more consistently, the fact that you're keeping the property leased with good tenants, right? So, you need to make sure you're avoiding buying too high over the median value as well, because this is definitely going to impact your bottom line, right? Properties that are well above the median value, those are going to negatively cash flow probably. And so you got to be cautious of that as well, right? You get a loan, the principal and interest payment is much higher. Also, that's going to cut into your profits, right? Your rent might not be able to cover all of those expenses, your loan payments, your taxes, so on and so forth. So just like I'm saying, don't get yourself into trouble by buying too far below the median value. Don't get yourself in trouble by buying too high over the median value either, right? The final thing, number 11, would be curb appeal. And so prospective tenants appreciate when the rental property looks desirable from the outside. There's a lot of times where I put sod in to my properties because there's a lot of just, bare patches. And we all know that a well manicured lawn with, nice grass is always going to be attractive, right? I'm not saying go crazy on the landscaping because you don't know if the tenant's going to take care of it or not. But it's nice to plant some bushes that, don't need too much maintenance. And it's nice to put some new mulch down, maybe build a little retaining wall, something like that, just so it's got a nice little cute kind of feel to it. That will help you really lease a property quickly, the outside looking nice. And I've had tenants, it's crazy, we do these high B to A class properties in Dallas and Houston. I've had tenants that move in and they actually do their own landscaping. They make the house look nice themselves just because, hey, it's just a better quality type of tenant. They make better income and hey, they want a nice house too, even though they're renting. And although the landlord didn't put the expenses into the landscaping, doesn't mean that the tenant won't do it. Hey, and if they do that, that's an added bonus for you, right? Because they're not taking that landscaping with them when they move out more than likely. So, that's a pretty important thing. And I myself, I even look back to when I'm looking at houses or when I'm looking, when it was looking to rent houses or properties in general, the outside and the curb appeal of the property played a big role in my decision. If it had a very cool, nice, inviting outside, I was more apt to rent that property, right? And I think my property management team, if they were here, they would say the same thing. decorative touches like landscaping, painting the house, a fresh coat of paint, window boxes where you can put flowers in, that stuff, it seems trivial, but it does add up. And this sometimes can lead to better profits. So I think curb appeal is a very important one. So we're going to take another quick commercial break. When we come back, we're going to wrap up here with another episode of the Real Estate Cowboys. Stay tuned. We'll be right back.
Looking to complete a 1031 tax-deferred exchange and are needing financing for your replacement properties? Let Graham Parham at Highlands Residential Mortgage guide you through the process and make your 1031 exchange go smoothly and on time. As a seasoned investor, Graham owns several investment properties himself, and he can share with you the best way to plan your exchange. Graduate into a better property or properties and make use of leverage to obtain better cash flow and higher returns on investment. Highlands Residential Mortgage has one of the best in-house loan processes to deliver your loan on time and without any surprises. We are 1031 exchange friendly. Call Graham's toll-free direct number today at 855-326-6802 for your free mortgage consultation, or visit us online at texasinvestorloans.com. Highlands is an equal opportunity lender, NMLS 195724, located 1201 North Central Expressway, Dallas, Texas 75234. Highlands Residential Mortgage, NMLS 134871, is not a financial advisor.
And welcome back from that commercial break. This is John Larson with the Real Estate Cowboys. This week, we have been discussing, once again, the 6 ways that rental properties can pay you, but then also 11 signs that can point you into a profitable rental. And so the last one there was curb appeal, and how important I believe that curb appeal is. Yes, inside the property, nice. You want that to be nice, obviously. You want to have, your mechanicals in good working condition, so you're not having a lot of maintenance costs and things like that. You don't want your tenant making maintenance requests every month. That's going to cut into your profits, especially on the cash flow, right? But, having a nice outside, putting some flower boxes, like I said, planting some bushes that are easy to maintain, new mulch. If there's a lot of patches in the front lawn, and, just having a nice lush lawn really goes a long way. And so, to finalize this whole thing, the 11 strong signs of a profitable rental property, if you can check off all or most of these indicators, chances are the property is worth a closer look. And so, of course, you're going to want to consider your financial circumstances and the advice of your trusted financial professional before making any final decision. But, if you'd like some assistance on finding a profitable rental property or turnkey rental property, you can always contact our team here at the Real Estate Cowboys or at American Real Estate Investments, which is my turnkey company, also my development company, where we're developing office buildings, single family lots down in Houston, and selling them to A-class builders like Lennar and Century Homes and all the big publicly traded builders here in America. We have a lot of options for you. And if you're interested in earning passive income and starting to generate passive income, you're looking to supplement income, you're looking to replace income, you're looking to build your retirement accounts, you're looking to build your financial future so you can retire early or retire comfortably. We have a ton of great options. And the 2 best ones I would say is definitely rentals and our private lending opportunities, where they're basically debt syndication opportunities where we let a group of investors come and lend on a commercial or land development in Dallas or Houston, which I love these markets because of all the job growth and the diverse economy that we have here. Texas being the 12th largest economy in the world. It's a very positive sign and great markets to lend money on for developments to earn a double-digit fixed rate of return on your money and monthly dividends that you can rely on to the penny. Private lending is just one of my favorite models right now for my investors who are looking for just a solid, consistent cash flow stream. So if any of these opportunities sound good to you, you can go to realestatecowboysdfw.com, put in your information. We have reports there and packages that talk more about our opportunities. You can find these on realestatecowboysdfw.com or on areiusa.com. There's a ton of information on both sites, blogs, videos, quizzes, finding out what type of investor you are. If you're not sure what route's best for you, take our short quiz. It'll tell you what's the best option for you based on the answers that you give us. And then also we have the Passive Income Guide available. That's a great book to read. The hard copy, I believe it's only $6.99. You can get the web version. It's only like $3. It's a great read, a very quick read, but talks a lot more about what we talk about here on the show. So if you're interested in private lending, there's great information in there. What's the benefit of investing in stocks versus real estate? There's great information in there. 89 questions you should ask any property management company before you decide to hire them. That report is in that book. We talk about our lifestyle investments as well, stuff that we're doing down in Belize. Vacation properties, if that sounds like a good option to you. Something that you can use when you want. When you don't want to use it, you just rent it out to a multitude of people that come to us through VRBO, Airbnb, so on and so forth. Actually, one of our islands, Little Harvest Key, was picked up by a company called Thrillist, which is a news and media company. They post a lot of stuff on Facebook. They have 6 or 7 million followers on Facebook, and they posted a video about one of our islands, the first island that we ever did in Belize, and it's up to over 30 million views. So we've just been getting bombarded with interest, rental interest for our islands and our vacation homes down in Belize. So that's interesting as well. We do tours every month down to Belize. We take investors down there to show them the opportunities that we have on the vacation rental side. And so if you're interested in that, Real Estate Cowboys, DFW.com, put your information in. We have 3 great options. Rentals that can get you the 6 ways that we named today, 6 ways that they can pay you. If you want just cash flow, I definitely recommend our private lending opportunities. Look into that. We're finalizing a raise right now that I believe is going to close this week. Another deal in South Lake, Texas, which is a wealthy suburb of Dallas. That one's about to close. But we're about to start another raise right here at the start of November. So it'd be a great opportunity to get in on a new deal by becoming a private lender and joining our private lending program. Because it's not just this one investment that you can lend on. We can continue to roll your initial investment into future deals and just keep that money working for you. And if you have a self-directed IRA or 401k, then that money's going back to you tax-free or tax-deferred depending on the structure of the account. If it's a Roth, tax-free, traditional self-directed account through an IRA or 401k, those taxes will be deferred, right? So great options. Visit our websites, put in your information if you want to learn more and speak to a member of our team. But for now, this is John Larson signing off. Always remember, what's your return on life? Have a good week, everyone.
All opinions expressed by the hosts of the show are the opinions of American Real Estate Investments, LLC, and do not reflect the opinions of guests or sponsors. No personal or professional advice heard on this program should be considered an endorsement to follow a real estate financing or investment strategy. Before acting on any information, seek advice from your financial, tax, mortgage, or real estate advisor, as the information is not guaranteed and investment strategies have the potential for profit or loss.